feel like it's been a minute since I've been able to use the word bottleneck.
It has been probably literally just a few minutes since you've been able to use that word bottleneck.
If you haven't caught the latest video on ARM's new AI CPU chip, make sure you check that out first. We'll link it right here. But let's expand on this discussion a little bit more on the CPU shortage or bottleneck, if you will, by taking a look at some of the CPU providers. But first, quick shout out to our friends over at fiscal.ai. They're the sponsor of today's video.
We use fiscal.ai in our research every day here at Chipstock Investor. It is a fantastic research to get really in-depth data on financials, the companies that you're interested in investing in. Here's a look at one of the KPIs or key performance indicators provided by Fiscal on Broadcom, their semiconductor solution revenue, and another one for Taiwan Semiconductor Manufacturing, the primary manufacturer and developer of Broadcom's semiconductor wafers. Beyond those KPIs, you can also get a great in-depth look at a company's profitability and different profitability metrics. Here's another one here for TSMC, and the forward price to earnings ratio based on Wall Street analyst estimates.
Fiscal has some great pricing options for all of you investors out there, and you can get 15% off with our unique link, fiscal.ai/CSI, right here on the screen or in the description below. But let's now shift focus and talk about what's at stake here. What is the total addressable market for AI data center cloud revenue?
We pulled the slide and mocked it up just a bit. This is from ARM's recent event, the ARM Everywhere event, where they announced that AGI CPU for AI inference. And ARM itself will admit the vast majority of the AI data center market now and for the foreseeable future, over the next 5 years, is data center accelerators. And those would be, of course, GPUs from the likes of NVIDIA and AMD, as well as custom accelerators. Companies like Broadcom providing IP, for example, to its top XPU customer, Google, for its tensor processing units. But that doesn't mean the CPU is dead, doesn't mean the CPU market is no longer growing, actually quite to the contrary. Thanks to agentic AI, CPUs are actually in high demand again. And this is where, as Casey, you just mentioned, some of this talk about a CPU shortage, a CPU bottleneck is coming up. And this is one of the reasons why ARM isn't just content providing IP anymore for its customers to design their own CPUs. It is actually offering its own CPU. You can see their annual revenue over the last reported 12-month stretch, just shy of 4.7 billion. Pretty small company. That's because IP revenue is not as big as designing the chip yourself and selling it to customers. So ARM very much going to get in on this game at exactly the right time. If CPUs are going to reach this new inflection point, to use another cliche, and cash in on this expected CPU, data center CPU market in the next 5 years, the time is definitely now. Casey, what does that mean for the two market share leaders in CPUs, though?
Yeah, the x86 leaders, Intel and AMD. Let's take a look at the revenues for Intel and AMD. On the left, client computing group for Intel in blue, that's PC and laptop revenue. That's been their bread and butter. And then in orange, data center and AI revenue, which is honestly not doing so hot. We'll talk about that in just a moment. But then on the right side, data center revenue in blue for AMD, which is actually growing. They're taking some decent market share there. And client revenue in pink, which is also expanding. They're taking market share away from Intel in this area as well. One of the issues that we brought up with Intel most recently is that they cut manufacturing at exactly the wrong time. They now have a product that people want, but unfortunately, they don't have the manufacturing capacity.
A shortage from over the last several decades has been the market share leader in data center and enterprise CPUs. Now, that's basically where the news headline is coming from, this CPU bottleneck, CPU shortage. And this is probably one of the reasons we saw in the news this week that Intel decided to go back and repurchase that 49% equity stake that it had sold to Apollo Group in 2024 for $3 billion more dollars that Apollo bought it for, buying it back to get control of its manufacturing capacity. And, it obviously must think that is going to be a profitable segment again going forward.
I feel like Intel's always behind the eight ball.
This is what happens when you're playing from your back foot. So this is Intel's problem, its market to lose. It doesn't mean there are no CPUs available. It doesn't mean the same type of shortage like the AI data center memory issue that has created shortages for other parts of the market like consumer and PC and video game consoles. What this means is Intel is probably just going to lose more market share because someone will meet that demand. And it would appear that demand will be fulfilled by companies like AMD as well as ARM and its manufacturing partner, which is very much expanding capacity at a rapid pace, Taiwan Semi Manufacturing.
We'll just end this discussion with one more chart from our friends over at fiscal.ai, looking at the profitability of Intel and AMD, just to take a look and see who is better positioned to continue gaining market share in the CPU space.
I feel like every time I look at this chart from Intel, it shocks me every time. It's just really painful to look at. But the good news is they made some rapid improvements in 2025, and the expectation is that will continue to improve, and they should hopefully have some extra cash available finally in 2026 to maybe put in some more work and expand that manufacturing capacity, since Intel has decided ostensibly it is going to continue trying to do both design and manufacture work. But yeah, who's in better shape here at this point to meet this demand?
Yeah, most obviously AMD on the right. Net income in blue, 4.3 billion in the last 12 months, and free cash flow, nearly 6.7 billion. They're just in a significantly better position.
We've also called out issues with AMD in recent years, but we decided last April during the tariff tantrum, it was most certainly time to start buying AMD again. And at times since then, it has looked a little bit frothy, especially when AMD cut those deals to get sales to companies like OpenAI. But we've had another market pullback again 1 year later. And AMD, as far as it appears right now, as we head into earnings season again, is set to have a pretty good 2026 with rapid revenue growth and probably a bit of profit margin expansion as well. That is a good position to be in to meet this growing demand for those CPUs. AMD EPYC Turin CPUs have been a big hit. We think AMD EPYC Venice CPUs are going to probably be even better than that starting later this year.
Make sure you check out fiscal.ai/CSI to get your 15% off discount. And we're going to link the video that I mentioned earlier, part 1 of this regarding ARM's AI chip. We'll link it right here. Watch it right now here at Chip Stock Investor.